Afternoon. Welcome to this week's video. Today we have a couple guests. On my left, it's Jackie Garcia, and then Javier Hernandez. So welcome to this week's video. Really quick, I just wanted to say today's topic will be about once you get a house, what's next? And the first topic that we'll be discussing today will be asset protection. So when it comes to asset protection, once we get the house, well, first of all, I wanted to, get a little bit, introduce yourself, so I learn about a little bit about yourselves, guys. So I'm gonna show ladies first.
Ladies first.
Thank you. Well, thank you so much for inviting us over, Edgar. My name is Jackie Garcia. I come from the banking industry. I'm no longer in banking, but I do come from a background of finances of the middle American families. Since my branch was in the middle American, lower class American families, I knew one side, but then when I left, unfortunately, right when I left, my husband was diagnosed with cancer. This was in 2017, and that's when I realized firsthand that the importance of having, asset protection, property protection, because, even though he had everything, all the benefits through work, he was working at that time, everything through work, his retirement plans, his insurance, everything that he needed to have, he had it there. But one time came home when he was sick, and he said, you know what, if I die, you're gonna have to sell the house because I don't have enough protection in case I do pass away. We were still paying our property.
So you thought you had everything covered, but then
Yes.
you realized that it just wasn't enough.
Right. So we were doing the right thing that society tells you to do, like have a savings plan in place in case of an emergency, have a 401k, have a life insurance through work. Everything, we had everything, right? But then we realized that wasn't enough, right? Because we owed still in our property, over $200,000 at that time. And he had under that when he said, if I pass away, I don't even have enough money for you to, pay off our home. So you're going to have to sell everything. Unfortunately, he was our breadwinner during that time, and you're going to have to sell everything because if I die, hopefully you don't, but I don't. But if I die, I have enough money for you to be okay for like a year, and that's it. So it's tough when we have someone who's taking care of our home. You buy a property and you think that's the end of it. That's actually the beginning of it, right? So it's important. That's when we realized that there's plans out there that most people don't know about, like the asset protection, the property protection, which is, we sit down with the client. Hey, now that you have your house, congratulations. This is, a first step to making your dreams come true, and your legacy for your family, right? That's the start. But now let's protect that. So we're going to sit down with you and we're going to create a plan, like, okay, how many years are you going to pay this for? And what's the mortgage amount? So based on that, let's say your mortgage is for $500,000, okay, right? And they're paying it for 30 years. They got a 30-year loan. We sit down and say, okay, so for 30 years, you're going to have a protection of $500,000 just in case, God forbid, you pass away within those 30 years, your family is going to be okay because the home is going to be paid off. But even better, what if you don't pass away and you get sick, right? Because by the way, we need money when we're at home and we cannot pay our mortgage and we're sick or we cannot work.
COVID happens and
exactly,
either you get furlough or can work, and usually that once you get a house, you think that's the kind of like the final step,
right?
And then no, it's just another stepping stone.
Exactly,
there's more to it. So,
and I know firsthand. I mean, when my husband was sick, I called our mortgage and to see if they would make an exception for us. And unfortunately, no. Life continues. Bills continue to pile up. They don't care, right? You have to pay your mortgage, and we didn't receive any help. And that's why before this happens to someone else, we need to hope for the best, but always prepare for the worst, especially in this day and age. COVID is happening and so many other things actually in the world right now. Cancer, ALS, so many illnesses out there that we don't even know why they're happening. It's important that we protect your health too, just in case you get sick. You have access to the death benefit. So nowadays, you don't have to pass away. You have access to the money if you do get sick, like a chronic illness, like a critical illness.
Oh, so there's those
Yes,
products that can help you.
exactly.
Okay, so
So imagine the peace of mind that that's going to bring a family that hopefully never happens. But if that did happen, you have $500,000 or 250,000 or $1 million policy that you can get access to. Because how many of us, let's be honest, have just $500,000 laying around in our savings plan just in case we get sick? It's rare.
yeah, and
Right.
if you have for instance, you have a 30-year mortgage, what are the odds of you getting sick at some point in 30 years?
And that's very good question. That is actually, it's very high. 3 out of 4 people. So that means that all 3 of us here, at some point around retirement, we're going to get sick of a chronic, critical, or terminal illness when we're either retirement or right before we pass away. It's statistics. So it's a very high number that we're all going to get sick before we pass away.
And what's this product called? What exactly it is that we can protect? How do you guys call it?
It's different. The name of the product, it has different names with different companies.
Okay.
Fortunately, we have access to over 85 companies,
Okay.
Nationwide. So all A-rated companies, by the way, top-notch A+ rated companies. And that gives us also credibility as agents that we're able to provide the clients with the best of the best out there. But but it's called term insurance with living benefits. And a lot of people don't know about the living benefits part.
I know about insurance or term insurance, but okay, so there is a term insurance with living benefits. So that means if I get sick in 20 years, I can still have access to some of the funds from that policy.
Correct. Yes.
Okay.
And so you get the best of both for death, right? For death and also for
Knock on
illness.
wood,
Knock
yeah.
on wood. I mean, we're all going to die one day, right?
Yeah.
But hopefully it doesn't happen within the 30-year term or the 15-year, right? But possibilities of getting sick, they're very, very high. So, we have that. It's in essence, it's income protection. You're protecting your income just in case you do get sick. You have those living benefits. And I don't know how you would feel now that I have that in place. Unfortunately, guys, don't wait till it's too late, because my husband was not insurable when I found out about all these services.
Oh, that's right. So just because you want to buy it doesn't mean that you
Yes,
have to qualify. Is that correct?
very correct.
Okay.
And a lot of people wait till they need it. When they need it, it's too late. It's like a parachute. When you're falling, right? If you don't have it, it's too late.
Too late.
You cannot. It's the same thing. Do not wait until you actually need it, because that could be too late. He wasn't insurable. He had cancer. So companies said, we're not going to protect him. He already is a risk.
So you have a house and you're healthy, right? Take advantage of it.
Take advantage of it. You're a brand new homeowner. You're healthy, young, or you don't have to be. We're no spring chickens here, right? So you don't have to be super young, but yes, get it. You're not going to be healthier. You're not going to be younger than you are today. So don't wait till 5 years from now. It could be too late.
Could be too late.
Yes.
Something could happen.
Yes. Did I miss anything?
No, I think you covered everything.
Yes. So that's called mortgage protection. A lot of people think mortgage protection, including myself, back when I didn't know what mortgage, I thought it was a protection for in case your house burns down. No, that's something else, right? That we need also, right? But the mortgage protection actually is a policy of the balance of your mortgage, right? Your loan, and for the term that you got your
And
your
just to be
mortgage.
clear, mortgage insurance, the one that you get on your mortgage, is completely different. That protection in case there's fire, something happens to your house, not because of health issues or you're not allowed to, you can work for whatever reason. That's completely different. Okay,
Yes.
that's in case something happens to your house.
Yes,
This asset protection is in case something happens to you.
right.
Okay, how am I gonna make the mortgage payment if I can work or my spouse is not working for for whatever reason? That's what it is.
Yes, that's a good, because there's a lot of people who get confused between the one and the other,
Yes.
which, I get. So,
Yeah, and home warranty too, completely different.
Yes.
Completely different.
they're all important, guys.
Yes, very important. So, but yeah, and then I know Javier, he wanted to talk about more about the buying a second home. What can you tell us about that specific topic?
Well, that's a good question too, Edgar. And one of the things that I really consider, right, for like let's say for every single person that comes and buys a house, you buy it with the intention for your family to live in there, right? So that's the first step. Now, as it is, there is no more real estate being made. Whatever was going to be made has already been done, right? So what you have to do, like if you ever play Monopoly, right, when you were a child, if you recall, like you were actually buying houses and renting to others, right? So just imagine one of the best ways for you to protect yourself for the future, right? And then for you to actually create assets where you can use them, to generate income. One of the best ways to do that is by investing yourself, like putting a couple $100 away on a monthly basis, getting some more money for a down payment on a second home. And then right after that, start looking for the second property. That's always going to generate you more income. That's one of the best ways, in my opinion, to to have secure income for the future, right? As a rental, or a worst case scenario, you can always move into the house and then you just stay there, right? That's one thing that I can tell you on that, right? Something very important, Edgar, that most people don't really think about, right, is actually what happens if I die all of a sudden, right? Now, let me ask you the following. I know that you won't be able to answer right at this moment, but if you have a house, do you have a living trust? Now, the second question to that is like, do you know what it does, and then also how it works? To give you an idea, on that part, as far as living trust, most people they're always thinking like, look, I'm okay. I have everything set up. My wife knows where the paperwork is for the house and everything else. That is correct. Just to give you an idea, in most cases that where something is set doesn't mean that you know how it works, right? Jackie has a great analogy when it comes to a living trust, right? Do you want to share?
Yes, I like to use this analogy because I feel like a lot of people, mostly 95% of Americans, right? We don't get taught these things in school, right? Like what's a will and what's a trust and what's the difference and all these things that, unfortunately school don't teach us. My parents didn't know, your parents, I don't know if they sat down with you and explained to you how that works. It's rare that happens. So it's, I like to explain things so that normal people like me and like you and like Javier understand that it's very simple. We don't want to bombard them with like all these complicated things. It's very simple. What I say is pretend that you buy groceries, right? You go to your grocery store and you bring all the groceries you bring in to the house. You bring it into the house and you set everything in the countertop, right? The meats and the produce and anything that you buy, right? And imagine you just leave it there and you don't put it away. What's going to happen to the groceries? Well, your dog's probably going to come and grab some, right? Or, maybe in a few days, things are going to start rotting, right? Or, if your kids are going to come grab, and before you know it, the groceries are going to be rotten or they're not going to be there anymore. So my analogy is the refrigerator, it's a living trust, right? Okay. Imagine putting all your assets, because your produce, your groceries, all of that, those are your assets. That's your home, right? That's your insurance policies. That's your savings plans. That's your investments. All of that, those groceries are all of your assets. What are you worth, right? What's yours? So you grab that and you put it in the refrigerator to protect it. Now, once it's in the refrigerator, no one can come and grab your things because they're protected in there, right? No one can come and challenge them, right? Because I'm sure you heard that, someone passes away or, you hear it all the time, these stories that, oh, so-and-so passed away and they lost their home because it wasn't protected, or so-and-so passed away and, the government, it goes to probate. So it goes to see who's gonna, people can challenge it, kids can challenge it, or family members can challenge it.
So you're saying that a will is not enough then,
It's not.
correct?
Right.
Keep in mind, we're not attorneys, right? But, making sure that, the difference between a will, that will help someone that has kids and money, like let's say in a bank account or a 401k or, some sort of an investment. And then a living trust will actually help you whenever you have kids plus money plus property, right? That's actually the biggest difference, amongst everything.
I still play Monopoly. I like to win. Anyways, so will is more like, if you're using the same analogy, it's like you buy, let's say you have 2 kids and you have, 2 cupcakes. I love cupcakes. So if you want to put in the refrigerator, you say, well, this one belongs to you and the other one belongs to you.
Right.
That's what a will does, right?
Yes.
It tells where it belongs. But then once you put it in the refrigerator, then that's when you need the living trust,
Yes.
so they can pull it out. That's like, otherwise it's gonna be there.
Right.
That's correct.
Yeah, it's like you can have your cupcake until your lunch. That's basically what it does, right? It
Yes.
protects it until you've done all the whatever you want to do for your living trust.
That's right. On that topic, we always recommend to everyone, like let's say if you are working with an estate planning attorney, you can always go to them and then ask them questions as far as what's convenient for you for your specific situation. Now, if you need some help, give us a call, and we're more than happy to actually schedule a one-on-one consultation with a licensed professional that does what they do for a living. They do living trust all day long, and they are specialized in just helping you to accomplish that. To give an idea, you work so hard for your money, and at the end of the day, right, if things are not set up properly, right, if your documents are not properly set up, then basically what could happen is like it could go to probate. It doesn't mean that your beneficiaries won't get it, but basically what it means is that it's going to take a long time, and that there is a bunch of fees, which might be 3%, 5%, or 10% of your estate. And then basically all of that has to be paid from somewhere. So guess what happens? Usually the court's going to say, well, the only place where we could actually get this money is from selling the house. So the house that you intended to leave behind to your kids, it's no longer there. And we see that all the time. And basically all you got to do is just go to your county recorder and then look at how many foreclosures happened over the last year. Outside of the arena of, like it's people not being able to pay, but, people died that still have a mortgage, and then that mortgage wasn't paid for 6 months, and then that house went into foreclosure for the same reason, because probate was there, and that's how it works.
Okay, so if I were to leave my house to my daughter and I just do a will, it might not be enough, because the government's gonna say, okay, well, we need to pay attorneys to see if everything is done correctly. And then obviously, if I get to leave some money, that's gonna take away from her inheritance, right?
That's right. That's right. That's how it works on that part. Most people, right? Like they have the idea to do that, but here is the question: like having an idea doesn't mean that you executed the idea, right? So in most cases, we notice that happens a lot. And
is there a specific time or ideal time to do a will and a living trust?
Well, the living trust, as long as as soon as you get married, right, whether you have real estate or not, you should always consult with an attorney or a licensed professional to do that. And you should look into doing that, the living trust, right? Now, keep in mind, the living trust itself, in the analogy that Jackie was using, is just a refrigerator that you go in there and then you put every single thing that you buy, right, and you put it inside this this document, and you can always take it out. You can always sell it if you want to, right? But you should do it as soon as you can. Now, whenever you get married, whenever you get divorced, not saying that you will, right? But if that ever happens, then you need to update it. That's very, very important too. right? So that's those are the main points. Whenever you have a child, you also might want to update it too.
I heard that it is good to update your will or living trust every so often.
During life events, Edgar. So like let's say, once again, marriage, divorce, birth of a child, death of a person, right? All of those life events, they actually have, usually something to do with with your wishes and your desires for when you pass away.
Yes, and it's one point that I did want to cover is that especially when you have, kids underage, right? You have little ones. It's important that you leave someone because I know I speak with a lot of single moms, for example, that have their little kids, and I ask like, hey, have you ever thought of, God forbid something happens, but what if something happens to you? Do you have everything in place to where your kids are protected? And 9 out of 10, they always tell me no, they never thought about it, or they say, oh, I'm going to leave them with my sister, or I'm going to leave them with so-and-so. And I always say verbal communication, unfortunately, is not enough. So if it's not on paper, on a legal document, your kids, unfortunately, they're going to probably go to, foster care while things are
Really?
Well,
yes.
things could settle.
And how long could that take?
It really depends, Edgar, because think about this. So say that you have a child, right? And I also have a child, by the way, too. So then we actually did this a while ago. But there's multiple people that are interested in the well-being of that child, right, or the properties that you own. So to give an idea, my brother, my sister, and then my daughter's godmother, right? Those are people that they would care for my daughter. But here's the thing: if I didn't tell anybody, or if I didn't leave those instructions in writing, what's going to happen is, like, let's say the state of Arizona is going to come in and say, well, wait a second. I also have the best interest for that child to be in the best, in the best hands, because, how do we know who's qualified to take care of him or her?
Oh, okay. So
Right.
they want to make sure who's qualified.
Yeah.
If it's not in writing.
Right. So now that's actually like the easiest way, because, like, let's say if no one says like, oh, I want to take care of them, then basically what's going to happen is like they're going to send that child over to a foster care. Now, say that the three of them say like, well, I want to take care of her, right? And that actually creates an argument between the three of them.
Mhm.
And then the judge is like, look, these people, they just can't come together. I really don't want to see this child in an environment where they are arguing over her, right?
Right.
So that's another one that that they want to look over to.
Or they're gonna try to find the other parent, and a lot of times, not always, but a lot of times the mother or the father does not want,
To be part of that.
right?
That could happen. Okay.
Or maybe they don't want the other parent. Sometimes they're not with them for a reason, right? And they don't want the other parent to raise their child because of X, Y, or Z. And I always say, like, well, if it's not in writing, if that's not taken care
It's
of
not
now,
official.
it's not official, most likely they're gonna look for the other parent, so.
Wow. Okay. That's good to know. Well, that's really good information. Also, part of the asset protection and the importance of having a second house and investing. What are some of the ways that we can start saving using some of the products that you guys or services that you guys have?
Good question. There's a couple of different programs for for different persons, right? So for different people. To give an idea, someone in their 30s has different objectives than someone in their 60s, right? So one of the best ways, one of the best ways that I always recommend to everyone to start doing it is actually just by looking and making a budget. That should be like the first priority. Then right after that is to start thinking like, what do I want to do with the budget that I have and the money that I'm starting to save? Multiple options. There is index accounts. Basically, on those accounts, you don't lose any value, right? Like that's another one. Another one would be a simple IRA, right? A simple brokerage account. Multiple companies offer those programs, right? My company is not the only one, but we're more than happy to help you just in case that you have questions. So those accounts, usually, you don't know where you're going to end, especially right now with everything that's going on in the economy, with interest rates rising.
Wow.
That just happened today, right? As of today, Wednesday. And something else in the economy too is that we're in the conflict with Russia right at this moment, so we never know what's going to happen internationally with the oil prices and energy prices. So that might have something to do with the markets, right? So say that you put $1,000 today, that $1,000 might be 1,100 tomorrow, or it might be 900 tomorrow, right? You never know. So those are called variable programs. And last but not least, traditionally there is the bank. So if you don't want to take any risks, right, you can always leave it at the bank. Now the problem with that is that inflation right now it's close to 7%. So say that you have $1,000 in the bank today, tomorrow or in a year from now, that $1,000 will be close to like $930, right? So you just never know what's going to happen with that. So one of the best ways of doing it is actually looking for for what's going to fit you best. And then right after that, we make a plan for you. And then after we make the plan, you have the final say on, if it works for you or if it doesn't, right? That's what I can tell you.
That's good information. Yes, if you have $1,000, you leave it in the bank. A year from now, yeah, you still have $1,000, but the value of the money, that's what's gonna be less. That's why he mentioned $900. That's how much. That's your purchasing power based on inflation. Yes. So if you have, everyone's different. So your situation is gonna be different from mine. So that's why if you guys have questions about where it's asset protection, life insurance, investment options, they're the professionals. Please reach out to them. They will tailor everything based on you and your family situation. That way it's going to be exactly for what you need and what you're looking for. So thank you so much for coming. Anything else that you guys would like to add at this point?
In my closing comments, right, like I always recommend, by the way, I didn't write the book. That book's been around for over 100 years by now. It's called The Richest Man in Babylon, right? That's what it's called, The Richest Man in Babylon by George Clason. And basically in that book, it actually teaches you the mindset of saving money. I would recommend that you get a copy from your library or, get it on Amazon or any other company that you can get it from, because that'll teach you the idea of start saving money for the future. Now, whether you come to us or you go anywhere else, the decision is completely yours, and we respect that. But the main thing or the main idea behind that book is actually for you to learn the concepts of saving money. That's basically what I could tell you. Right then.
How about you, Jackie? Do you have any books that you like to recommend to the audience today?
That's one of my favorite. There's a book called the Retirement Miracle.
Okay, I think I heard of it.
Right, The Retirement Miracle. There's another book called the Family Bank Strategy, which to me, anything that's important and that can be life-changing for you usually is written in a book, because a lot of people don't read. So it's important to read and to educate ourselves and to see what's out there and what the wealthy have been doing for so many years, for so many centuries, right? So that we can apply them ourselves. Also, it's important to not only wish we all have dreams and aspirations, and we plan, right? But we don't know how to get there. We don't get a roadmap. How can we get to our destination, right? We know where we want to go, but sometimes we don't know how to get there. So that's why it's important that you consult with someone. If it's not with us, with an expert, right? That's going to help you get the GPS going so that you can get to your final destination and live the life that you want to live,
Yeah, to me, I can compare it to when people are curious about having a house, or becoming a homeowner or having a home ownership. A lot of our clients, at first, they didn't know that they qualify, and they were just shy or didn't know how to reach out to someone. And a lot of times, our own clients disqualify themselves when they might be already having the employment, and the income to be home ownership. But just the fact that they listen to all this noise, and then they don't know whether they're right or not. So just talk to someone. If you guys are curious about what to do next about your whether it's a will, living trust, insurance, reach out to them. They'll guide you and at least give you an idea of what you need to work on, and they'll tell you whether you're ready or not. Same thing with home ownership. Talk to someone. If you're curious about being a homeowner, talk to a realtor and see if you're ready. That's how you find out. Thinking and guessing, that's really not gonna get you anywhere.
No,
You know,
just like when we go to the doctor when we're sick, right? Because they're the experts. Same thing with, with real estate and finances and investments and estate planning. It's the same thing. Go
Yeah.
with an expert. That's gonna help you get there.
Biggs doesn't work on real estate and estate planning.
Yes.
Right.
All right. Thank you so much, guys. Well, thank you for audience for being with us this week, and I hope you guys like this content. Please like our page, and if you have questions, please feel free to reach out. Thank you, Jackie and Javier, for coming over,
Thank
and
you, Edgar.
hope you guys have a wonderful week. Okay.
Thank you.
Thank you.